This is a stock called Primoris. This is a couple of years ago. You'll see the same thing in stocks, in commodities. You'll see the same thing in Bitcoin. Why does everyone keep saying it's Ross late? I'm Ross. I started on time. I don't know what these questions are about. This is the initial move higher, okay? So we want to see a stock that's got some strength. We want to see a stock that's moving. That shows us big institutions are buying. And then the breakout point is that area. And we want to see a pattern that looks like this shallowing base breakout. Because what is happening here is the supply is being absorbed in this stock, is consolidating, okay? And, oh, some people are saying there's no video. Derek, did you press play? You must be on the other channel. Anyway, this is the shallowing base breakout pattern, okay? Refresh page. Okay. There's always an issue. Anyway, this is what's happening. So a stock that runs from 24 to 36, it's a 50% move in a couple of months. That means you got some big buyers, right? That means the big institutions are buying up the stock, but they don't want to pay an infinite price. And so eventually you get some profit taking. The stock pulls back. And if this buying is still there, if they're still building positions, they're going to then drive the price up. It'll sell off again, and they drive it up. And they sell up the stock and drive it up. And what's happening here is they're sucking up the supply, right? The number of shares trading out there on the float is shrinking and shrinking and shrinking as these institutions are building up their position, right? Just imagine there's, call it 1 million shares out there trading around between you and me. And then here comes Warren Buffett, and he wants to buy 800,000 of those shares. So every day, every week, he's buying some and buying some and buying some and buying some. And as he does that, he's taking those shares and putting them in their account. And the float, the number that's out there trading, is shrinking and shrinking and shrinking. So the supply, the number of shares available, is shrinking. And if that demand is still there, if the Warren Buffetts and the Goldman Sachses and the BlackRocks and the Blackstones are still out there buying, well, then what happens when demand stays here and supply shrinks? Right? When demand outstrips supply, price goes up. We know that. And so the fact that these pullbacks are shrinking, and they are going from, 20% down to, oh, shoot, come on. Down to 15%. Down to, 9.5%, 10%. Down to 5%. The shrinking, that's the compression. The stock is becoming harder and harder to buy. There's less and less selling each time. And so when you get this setup, again, in leading stocks, in strong markets, in uptrends, this is going to be your best place to buy. Right there, right as it breaks out, because there's your supply. Can't get above 34, stops at 34, stops at 34, stops at 34. Pullbacks get shallower and shallower and shallower and shallower. This is where you want to buy. Okay? And the beauty of this is that it also reduces your risk. Because not only are you getting in right there as a stock set to rocket higher, but you're not risking a lot of money to do it. Why? Well, because if you look at these lows, okay, let's just look at the low of each move there. Notice how once it came down here and shot higher, the next low was higher than that. It didn't revisit that, right? It pushed up, pulled back, next low, higher than that. Next low, higher than that, right? Do you see that? See how it never comes back to that last low? So how does that help us? Well, that last red line, what I call the swing low, that's your stop loss. Okay, that's where your risk is. It shouldn't go back below there. And so that's where, if it goes below, we're wrong, we'll get out of the trade. And so if we are buying here, this a little bigger so we can see what we're doing. If we're buying here and we put our sell stop order, our stop loss down here, so we buy at 34.5, we put a sell stop in at 32. What does that mean? Well, it means our total risk on this trade is just 6%. And on 6% risk, look what the stock did, right? So if you can risk 6 and make 20, 30, 40, 50%, then boy, you don't have to be right all that much, do you? Now, you need to be right more than 1 out of 10 times, but you don't have to be right 80% of the time. You're right 30% of the time. You're going to do pretty well. And that's the whole game. Minervini calls it getting odds on your money. I want to risk 6 to make 16. I want to risk 10 to make 40. I don't want to risk 10% and take profits at 3 or 4, right? And if you are making more than you're risking, then yeah, it's just a math problem, right? If you average 3 times your risk per trade, that means as long as you're right 1 out of 4 times, you're not going to lose money. If you're right 30% of the time, you're going to make money. So anyway, that's our go-to kind of breakout pattern. It's not the end-all, be-all. It's not the only way I would trade stocks, but it is important to understand that structure, right? Should I sell FCX? No, I'm still holding. In fact, I've been buying micro copper contracts here. Let me see. Whoops. Let me get out of here. Am I connected? Let's see. How many of these do I have now? So I am up to 4 contracts. Not a lot. I'm trying to just buy more here on the dips lower. I like the micros because it gives me more. Each one of these is only 250 or 2,500 pounds. So each one of these is, call it, what, 15 grand, something like that, worth of copper. But notice the pattern we're seeing here in copper, okay? Commodities follow this stuff even better than stocks do because they're pure demand supply driven. Let me take this pattern off, or the positions off. But look what we're seeing here in copper. So I'm kind of looking at this as a base on base, but I'll zoom out in a second and show you the bigger picture. So we had kind of this, singular, almost like a cup with handle pattern right in here that it broke out into. And then, as we saw, the market did nothing all summer. That means the tech stocks went nowhere. That means the AI build-outs come into question. And a lot of the copper demand is from the data center stuff. So that's kind of slow. But look how it came in and created another breakout pattern right up in here. Okay, so it's kind of base on base, like breakout didn't quite run. Now it's building into another one. So we're consistently seeing that consolidation in the market there. And if you really want to kind of blur your eyes and zoom out a little bit, you could even make a case that this whole thing is one big consolidation. It's taking place all of 2026. See how we just had this big monster. So I'm extremely bullish on copper. I'm buying it 2,500 pounds at a time. Currently got about 10,000-ish pounds. I probably should have just bought big contracts, but I'm buying the micro futures because I'm a sissy. The big one is 25,000 pounds, so it's $150,000 worth of copper per contract. It's decent size for me. I don't know. Maybe that's changed to you guys. But very, very bullish on copper. And let me show you how I think this is going to play out, okay? Let's take a look at gold. And do you see that pattern? Do you see why I bought and recommended gold right here? Do you see that same breakout pattern off the lows? It had been selling off all year until it finally began to absorb supply. You know what that's saying? They're selling, and then it's finally cheap. Now we're going to start buying. I don't care if it's the central banks. I don't care if it's Uncle Sam. I don't care if it's Warren Buffett. I don't care who it is. It's getting bought. And then you get the breakout higher. Ran right here into the last area of supply where it is stalling, pulling back, right in here to this meet. And I think it's a great time to buy. It's going to continue rising higher. But look at how many times you've seen this. Look at how well these commodities follow this pattern. That one is perfect. There's your buy. Look at this one over about 5-6 months. See that same shallowing breakout pattern? There's your buy. Look at it over here after that initial run. See it? Over and over and over again. Where you get the big run higher, a multi-month consolidation, then a breakout. And when I first got long gold, and in case anyone thinks I'm just making this up, I've got a screenshot of it, I think, on my desktop here, if I can find it. There it is. This is my weekly newsletter. Now, by the way, everyone should be getting this. This goes out every single Friday. All of my Black Ops members. So for any reason you're not a Black Ops member, it's still just $5 for the whole year. So there's no reason not to. Just go to that Trade with Ross link in the description. But we do these every week. There's another Thursday session over Zoom only for members with our analyst. You'll get my weekly newsletter every Friday. I'll give you my indicators, a ton of stuff. It's just $5. So make sure to get signed up for that. But if you see here, this was, what was the date? Oh, there it is, April 12th, 2024, what I call the start of a gold super cycle. Okay, April 12th, 2024 is right here. Okay, and what I was noticing in gold is the same thing we're seeing in copper right now. Okay, and if you look at this chart, I'll turn the moving averages off because they really don't matter here. Notice here on this daily chart how we had a similar pattern. Big run up followed by shallowing and shallowing and shallowing and then a breakout in here. Okay? Now, watch this. Go out to a weekly chart. If we step out to a weekly chart, you see the same thing. This is over about 4-year period. Big old shallowing, base, breakout. Again, right here, around 2100. And then if we step all the way out to a monthly chart, meaning each candle is 1 month, so we're looking at 25 years of data, you see the same thing again. This big multi-decade rally, shallowing, base. So that's why I say we have a gold super cycle coming. Because short term, medium term, long term, this is all setting up. This is how commodities move. And then if we zoom out of this and see what happened, well, I'd say it's a pretty good call on gold, right? Pretty good time to buy right in there. And I don't think the move is over. I think we had a little pullback because, as happens, prices get exaggerated, margin gets excessive. The exchanges come in, they raise the margin rates, etc. But, compare that to copper. And I would admit that it's not quite as clean as gold because the market's nowhere near as big. But, all the way back here for a year and a half or so, you see like a very similar, it's just coiling up. And the fundamental case is crystal clear. Demand is huge. Obviously, data centers and all, but not just that, but EVs and the electrification of everything, the massive grid expansion we're in the very early stages of right now. Demand is huge, and the supply can't keep up. Look at the numbers. We do not have enough. Production estimates of copper over the next 5-10 years are not near enough to meet the demand. In copper, you can't just, let's go mine some more. Like, it takes years and years and years to get these copper miners up and running. So, yeah, SCCO is one of those. Look at the pattern here in Southern Copper. And you'll see how all this kind of works together, right? So we have a strong pattern in copper. We have the copper miners all kind of setting up and starting to break out here. FCX was another one. So anyway, AG, First Majestic. Yeah, silver obviously moves mostly with gold. You see a very similar pattern here. And, when a metal moves, the miners typically move in excess of that, okay? Because just do some simple math. If, let's just take silver, for example. Let's say silver goes from, 65 to, let me find some easy math here I can do. 78, okay? That's a 20% up move in silver, right? Now, let's think about a miner, okay? It costs them, call it $40 to get silver out of the ground. That's their cost. So when it's at 65, their profit is 65 minus the 40 is $25 an ounce, right? Well, if it shoots up, their cost is still 40, but now they're selling it for 78. So now their profit was 40, 78, 38, right? So the miner's profits have gone up. I thought I was doing easy math. What? $13? So it's about a 52% increase in their profits on a 20% move in silver. See what I mean? So that's why if silver goes up 20%, the miner's going to go up 50, 60%. And the other side also works the same. Because if silver fell down to 40, well, their profits fell like 95%. Okay? So, yes, I mean, there's just, you can play the metal, you can play the ETF, you do the futures, you do a miner, all of them. Anyway. Yes, COPX, correct. Thank you, David. Yep, COPX is the ETF. If you just want to own copper without getting futures or anything crazy, that's an easy way to do it. What should we know in trading futures? So futures work, and whatever broker you use, Interactive Brokers, TradeStation. I think about switching over there. You can trade futures. Futures work on margin. Okay, so for example, a micro futures contract is 2,500 pounds of copper. Okay, one contract. It's the same, oil is 1,000 barrels. A contract of gold is 100 ounces. So this is how they work. One contract equals, this is the micro again, MHG, 2,500 pounds. Okay, the price you see quoted is the price per pound. So one contract equals whatever 2,500 times $6.71. Come on. $16,775. Okay, that's how much worth of copper. Now, you're not risking $16,775. Copper's not going to zero, obviously, right? Could it go to 5? Could it go to 4? Theoretically, sure. But it's not as if, like, this is all extrinsic value. But let me just pull up the contract here. So this is the contract, 2,500 pounds. And the margin is how much you have to put up to control it. Let's see. Let me just, God bless AI. Let's see what it is. I don't know exactly. $1,200. Okay. So margin. Now, that doesn't mean you can only have $1,200, but you need at least $1,200 to own a contract. So, $1,200 divided by 2,500 pounds means if copper falls 48 cents, you wiped out. And you got to put more money in. Well, actually, long before that, but you got to keep at least $1,200 in, okay? So, theoretically, sure. Theoretically, you could buy 25,000 pounds of copper for 12 grand, even though it's $167,000 worth of copper. I wouldn't recommend that. But let's say you had 8 grand in your account. You used 1,200 of the margin to buy one. Now you're double long copper. Or if you had $5,000 in your account, 5,500, you're triple long copper, right? So that's how it works. It's going to move as if you held the full 2,500 pounds, but margin required is less. So that's why you hear guys blow up trading futures. You can make it boring. You can hold the full $16,000 per contract. You can hold 1,200 and roll the dice. But anyway, that's how those work. Thoughts on SoundHound? Not loving the technical picture here. We made a lot of money on this thing a couple of years ago. That's where we bought it. Over here at like 3, and it went to 25. The fundamentals haven't played out as well. They've got a big patent of voice recognition, AI voice recognition patents, big portfolio of patents, excuse me. It's getting some legs here recently, but it's a very volatile stock. Schlumberger, yeah, these are all up on the Venezuelan oil news. And the reason being, they're the services contractors. These are the people that this new entity is going to hire to come in and build all this equipment and build the refineries to process that heavy sour crude and to clean up all their machinery that's been gunked up over decades. So yes, Halliburton and Schlumberger all kind of trending higher on this news. Thoughts on Energy Transfer? Yeah, love it. Looks great. Nice, clean, smooth uptrend. It's not a big mover. It's a pretty calm stock. But yeah, looks good. Now, one of the things I was looking at earlier, this looks like it's kind of coming back, is the rare earths. And if you look at our market health indicator, this, by the way, is included with all those Black Ops memberships. So this alone's worth the $5 if you want to click that link and get signed up. But what it does is track 40 different sectors of the market to see which ones are rising the most. And it's getting a little muddy at the moment. Sometimes it's crystal clear, but it just shows you which areas are rising the most over different time frames. This is going to help you find the leadership in the market. So the last couple of months, obviously gold miners doing very well, but you've got stuff like cloud computing that is consistently outperforming the market. Areas like software starting to heat up that have been killed most of 2025. Rare earths, for the first time in a while, is coming up the ranks here and starting to outperform. So some of these can be really good because you see it's just been absolutely hammered since May, despite being a leading area before that. And now it's starting to come back in some of these rare earth names. Look at Lithium Argentina. Look at how this thing is starting to form that same pattern here off the lows, that telltale sign that the stock is being accumulated, that the selling is getting exhausted, that the buyers are stepping in, right? So this looking very well. Sigma Lithium also trying to break out here after a shallowing off the lows. USAR, similar chart, not quite as clean, but look at this area here. Look at this kind of $20 price print. Notice how significant that area has been for a very long time in this stock. It was heavy resistance, kind of got stuck in there here, but support, then resistance. So this thing breaks out through 20. I'd be interested in buying this stock for a move up into the high 20s or 30s. Yep, still holding VRT. I'm hoping it rallies here pretty soon. See, I turned this off. Let me see. So I'm down $1,300 on this one. I put a stop down here at 248. I bought it here at 266. Of course, I bought it like on Wednesday. Then it gets hammered on Friday. The thesis makes a lot of sense. But again, I'm not taking a big risk on this thing. I can take a 6 or 7% hit over and over and over again before I get into any trouble. But if I'm risking 6 or 7% and I'm looking for a move of 20 or 25 or 30, the math works out extremely favorably. So I don't think it's going to take out this 247 low. If it is, I'll wait. I'll revisit. It's possible I'm early. It's possible I'm wrong. I don't think so. And it makes a lot of sense for it to pull back into this last supply area, this last place the stock found acceptance, right? Right in here. I don't think that's a surprise. But if it breaks down here and goes lower, my timing's wrong. And I'll take the hit and move on. All right, so index is flat to down a little bit. Yields keep rising. New high in the 10-year. That's not good for anybody. Gold continues to kind of cool off today. Silver, copper up a little bit. But I think this is going to be a monstrous trade. Because when you go back and look at copper, over, let's just go to like a weekly chart. You can see how this thing tends. Look at what, like when it really moves and you get a multi-year run, it's not a little bit. Like that was a 5x move over a couple of years here, right? This rally over in here, this was a doubling in about a year and a half. Very similar to what we saw in gold, right? Had this huge move up in the early 2000s from 250 to 2000. And then from 2010 to 2024, essentially went nowhere, shallowing out, taking a breather. And it's just how commodities work. They tend to run in these big multi-year super cycles higher. And there's a lot of them, in fact, setting up like this. But copper is probably my favorite for the reasons I said earlier. So I am expecting higher prices in copper. All right, fire away. Let's look at some stocks. Let's get into it. And everything's setting up like if we can find some kind of like day trade, I'm happy to put some futures on. What's this? Micro gold. This same pattern I'm showing you will work on shorter time frame charts. So like if you find this, if you want to be a day trader or whatever, and you find this same thing, like this one's kind of spotty, but you can see the same thing here, right? Where you get these runs followed by, these kind of tightening patterns here and by these same breakout moves. So if we find something, I'm happy to take it. Just everybody shows up on Monday and goes, trade, monkey, trade. And I'm like, well, I don't really see anything I want to buy at the moment. All right, so we said SanDisk. Yeah, it's fine. I don't love the big dip below the 50. I would want to see it break this little trend line here. I mean, you've got kind of a wedging pattern going on here in SanDisk. It's just so extended. Like it's going so far, so fast. You're talking about a stock that was, $50 a year ago that's now $1,500. Like they've priced the thing to perfection. So you're definitely not early on this one. And if you timed it wrong, I mean, you just sat through a 50% drop. It's massive drop. I personally don't see it. I think it's a little late to the party. I just think stocks don't fall 50% if there's consistent demand. Right? So Seagate went through something similar. There's that same breakout pattern in Seagate. I'm telling you guys, if you learn nothing from me, learn this. This is how you make money, buying these moves. Now, having said that, it's really holding below the 50. I don't like that this move failed. See how this failed? And it really doesn't need to get below 765. It wouldn't be my favorite pick right now. It would need to come in here and firm up and show me it can hold near these highs. As long as you're still getting these, that's a 25% drop in a week. That's just not what stocks that are in demand and being bought by institutions do. They just don't do that. Iova, yeah, looks great. Obviously extended up 100% just the last month or so. I would trade this like a high tight flag. So what you'll typically see in these is after a very powerful move, like this thing doubled in what, 2 weeks? You'll get kind of something like this. And I would not buy it until it breaks through this trend line here. That's what you want if it's going to continue. There's no guarantee a stock that just doubled is going to continue. In fact, the risk is much more heavily weighted to the downside because it's got a lot of room below it. Zscaler, ZS. Yeah, I like Zscaler. You might be a little bit early, but this looks much better than a lot of the names we've looked at so far because it got killed into last year, early 2026. It spent a few months consolidating and absorbing, and notice how we're kind of coming in here and beginning to tighten up, and then big, look at that so it dips down and just boom, big 10% up day, holding up here at the highs. Yeah, that looks really strong. I like this one. Ondas. No, not for me. I mean, it's below the 200 day. That's the big heavy line here. This is the 200. Anything below the 200 is almost always a non-starter for me, unless I get real good structure off the low. Tried to get up and then sold back off. It just doesn't look good. This looks like it's rolling over pretty hard. Forget about now. Iova. Oh, we talked about Iova. Ivanhoe Electric. Yep, long this one too. I bought a chunk of these. I may be early in some of these. Obviously, the proper buy was down in here. The breakout, basically where my stop is, and the retest. I just started putting on some positions. I'm going to buy it in slowly to some of these. But I'm long from 1164. So I'm down, 40 cents, 50 cents, something like that. But yeah, still like Ivanhoe. Wolf for a comeback? Not yet. I mean, it's still making lows, still holding below the 200. It is a massive sell-off. Think about this, okay? You got to remember the market is all about supply and demand. Whether we're talking about stocks or rare coins or 20-year-old bottles of Pappy Van Winkle, it's all about supply and demand, okay? If the shelves were flooded with this stuff, prices would come down. If there's only 6 bottles available, it's going to be a bidding war. And stocks are no different. So what would happen if something you really wanted went 50% off? I'll tell you what would happen because my wife just bought a bunch of stuff with all these sales over the weekend. They go, I can't miss this. I got to buy it now. This is crazy. It won't be this cheap again. That's what happens when in-demand merchandise gets marked down 50%. So if your merchandise gets marked down 50%, and then for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 30 trading days, no buyers come, there's not demand for it. Okay? I'm not saying the stock is overvalued. I'm not saying it's a bad long-term investment. I'm saying right now there is no demand for it. Nobody wants this stuff. So I would absolutely not be buying this because what you should see is responsive buying to this over dip. But instead it's making back to the lows and back to the lows and lower highs and lower highs and lower highs. So exactly the opposite of what I want to see. In fact, if I look at this chart upside down, that looks like it's going higher. That looks like it's kind of stalling into supply. It's going to spend a few days here and then break out higher, which is probably what's going to happen. The problem is we're looking at the chart upside down. So it's probably going to do the opposite, right? Micron, would Micron be a sell? I don't think it's trying to keep running. Micron's a great company, obviously getting touted by Trump, and that's just because they're investing in plants here in the U.S. Isn't going to hurt. And, the reason I say I don't like buying extended stocks, like we bought this one in our Alpha Stock service in April, it made a huge move. It's like a, 100+% move? What did it go? Yeah, 160% in 2 months. That's just crazy, crazy money. You have to know you're at risk of a pullback. People want to take their profits. Euphoria is taken over. The momentum traders like me have stepped in. The fundamentals. So this is absolutely a possibility. But look at the difference between this and Wolf, okay? This came down, and then we got some responsive buying. And the next dip was lower. See, it was higher low, higher low, higher low, right? See how it is trying to come. Okay, it comes in, and now a little less, and we're probably going to see something like this. And that's going to set up the next move higher, okay? So, yeah, I think Micron still looks very good. But it's subtle things, but it's a huge difference in forecasting a stock's movement. It's totally different. Look, between, okay, this thing went, 40% off, and they bought it heavily for 2 or 3 weeks straight, and they're not letting it sell down there again. Yeah. Oh, this is great. Amplify Cybersecurity ETF. Yeah, I've always looked at cyber, CIBR, but same roughly thing. Yeah, very, very strong. Cybersecurity is huge right now. And what's the fundamental story here? This is when things really get exciting, is when the fundamentals make a hell of a lot of sense and the chart is showing you the confirmation. That's when you put your foot on the gas. When I see the corn market flying, I'm like, I don't understand why. It's just going up, right? But cybersecurity makes sense. We got AI breaking out of sandboxes, hacking companies, the bad actors giving access to it overseas, doing all kinds of naughty things with it. And every company in America with credit card numbers and client databases and Social Security numbers and trade secrets and a formula to Coca-Cola don't want their stuff hacked. And AI is making it very difficult. So they're all rushing to, your checkpoint softwares. This one looks really good. I have to tell my analyst on this one. Oh, whoops. Sean's on here. Sorry. Anyway, the cybersecurity stocks, they're all flooding to these names. And if you look at them, look at the move. Look at Rapid7, right? Look at Sentinel-1, Fortinet, just absolute monstrous moves. Palo Alto, kind of the leader here, right? Datadog, I'm sure it's up. Yeah, just huge moves last few months. So when you look at, then you get the chart that's really setting up for a breakout higher. That's when you really want to get aggressive with it. And Checkpoint, all these all the software stocks sold off first half of this year because agentic AI came out. People go, companies going to build their own software. That's stupid. But they threw out the baby with the bathwater, and they threw out the cybersecurity stocks too, and those have become massively in demand. And look at this nice little move off the lows here. That's about picture perfect, right? And look at the higher volume. This one's kind of harder to tell, but notice how this is not a great example, but notice how the pullbacks tend to see lower volume, right? You tend to get these pockets of really low volume, and the up days tend to have the higher. I guess that's not 100% accurate, but you look over in here, very low volume on it's consolidating, and then the days which shoots up are the higher volume, right? That's what you want to see. This is not a great example of it, but ideally, you want the volume chart to almost mimic the stock. You want to see higher volume when it's pushing up and lower volume when it's pulling back, and higher on the moves up. That's just a dream setup. But this one looks really, really good here for breakout through 140, 141. Are we not on the blow off top when market goes crazy? Get out, as Buffett says. In certain areas, we're always in a blow off top, sure. I don't think we are in terms of the index. No. I think it's going to get, listen, prices are inflated. Make no mistake. If you invest a whole bunch of money in the S&P 500 index today and hold it for 10 years, you're probably not going to have very good returns over it. That's 100% true. But they're not silly. It's not the euphoric state, right? Silver was the last example of that, right? Silver was trending up, okay, and was going over multiple months from 30, okay, to 35, good, 40, okay, we're getting, 45, 50, and then from 50 to 120 in a month. That's silly. That's a blow-off top, okay? That's the futures I talked about. That's guys levering up and buying as much as they can on as much margin. That's unsustainable. Now, this trend would have been much more stable, right? But that's a blow-off top. And listen, if you go back to the NASDAQ index, let me show you something. When you're talking about a market blow-off top, when you look at it in log scale, see, it doesn't look that crazy, does it? It looks like a pretty steady climb. The last time we saw something look crazy was when? The dot-com bubble, right? we're trending, we're trending, we're trending, and then that's just vertical. And it came back in line with that trend. And then 08 happened and got below it and then ripped back and get right back in line with that trend, right? So when you put stuff in logarithmic scale, that's when you're really going to see a blow off top. But think about what happened in the NASDAQ back here in the late 90s, okay? All the arguments for stocks being overvalued and overinflated and too much of GDP, et cetera, all those arguments were being made in 1999. And all of them were 100% true right in here, okay? The market just went up 100% in 3.5 months. The entire NASDAQ index doubled in 3 months. That's crazy. And then guess what happened? It doubled again. That is craziness. That is blow off top euphoria. Housewives trading stocks that they don't know what the tickers mean. That sounded sexist. You know what I'm saying? Like everybody wants to just trade, kind of like we saw in 2020 with the meme coins and all that garbage, right? When you had YouTube personalities selling their Lamborghini to buy an NFT of a monkey smoking a cigarette, like just silliness, that's when you really get crazy. So we're starting to see some of that. I mean, they're pricing in perfection in some of these hyperscalers and saying they're going to be worth like SpaceX is a great example of that. It's going to be a great company. Is it worth the trillions trading at today? No. Like the $2 trillion potential IPO from Anthropic, like we're starting to get there. We still have some more time, though. I just don't see the indication that we're going to collapse from here. But very good question. Bloom Energy, like the stock. I think it's early in terms of a technical. Resolve, RZLV. Oh, Revolve. Yeah, kind of a big nothing burger. This stock just doesn't go anywhere. It's been between 2 and 3 all year long. Somebody said Service Now. Yeah, this is moving nicely again. I mean, I like this company. I did a video on it over here when it was at 100, and I sold it because it went to 140 in like 3 days. I'm not going to look a gift horse in the mouth here, but yeah, I think it's a great fundamental story. Jensen Huang said it's going to be a $1 trillion company. Currently about 150 billion. So yeah, I think this thing will be $300, $400, $500 a share in a few years. Absolutely. And the short-term trend looks good too. Nice action, nice big heavy buying days. Didn't have a great breakout pattern. It was kind of choppy. But yeah, looks very, very strong. AppLovin, APP, definitely not. Absolute turd. Wouldn't touch this thing. DRS, nope, absolutely not. Big sell-off, making new multi-month lows. Yeah, this could be, please hear me on this, this could be a great time to buy this long-term. Absolutely could. I'm not making a fundamental investment case on this stock. When I go through these, I'm just talking about, does it look like it's about to run higher? I'm just dating these stocks. I'm not marrying them. If you're marrying them, you want it when it's low. I'm just dating them. I just want to have a good time, drop them off, and block the number, right? So that's all we're really doing here, is looking for good times to get into these. Bitcoin, yeah, it's, remember what I said about supply and demand, because that's what moves this. Think about what's happening in these stocks, okay? What's happening over here in Bitcoin when it just chops around kind of 90,000 for 2 or 3 months? What's happening? What's that telling you? Well, it means the buyers of Bitcoin and the sellers of Bitcoin kind of agree it's about what it's worth. No one really thinks it's massively undervalued. Nobody thinks it's massively overvalued. For whatever reason, the market's in agreement. And so there's lots of supply and demand there. Now, something changed. It sold off, okay? It sold down in here. Now, when it starts driving up and demand is increasing, where's it going to go to? It's going to go to the last place they found supply, right? Buyers are going to buy until the sellers come in and overwhelm them. Where's the last place sellers come in and overwhelm them? Right in here. And so that's why it's stalling here, because it is feeding into supply. The people that bought here that are massively underwater are wanting to get out. And so it's got to absorb that supply. And then if it breaks out higher, where's it going next? Probably up here, about 90,000. If it gets through there, where's it going next? Probably up here to this kind of, 100, 110,000 area where it found acceptance last. And so you can use these areas as targets. Or if it's going down, Y'all remember the video I did saying over in here, saying Bitcoin is going to 60,000? The one where the diehard fanboys in their mom's basement just told me I'm an idiot. I don't know what I'm talking about. I don't understand anything. Yeah, look what happened. Right to 60,000. How did I know that? Because that's the last place this thing found acceptance. That's the exact penny low of the flash crash in Feb 2025. That's where they're going to find demand, and it is going to sell until they meet it. And that's where it went, pretty much to the penny, 60,000, right? I'm not a stock whisperer. There's no fundamental case to be made for Bitcoin. There's no intrinsic, based on earnings per share or sales. It's just a supply and demand asset like corn or gold or anything else, right? So it's going to go to the last place it found demand. And when it rises, it's going to go to the last place it found supply. Don't overthink this stuff, folks. It's not any more complicated than that. You notice we're not using any indicators. No flashing green lights. No double super secret crossing line garbage. You don't need to. Did I advise not buying APP? I mean, it's just in a death spiral, right? It's going from 700 to 300, and it keeps falling. So I absolutely would not buy it. It's deep under the 200-day moving average. It's making new 52-week lows. The moving averages are reverse stacked and trending down. Like, everything about this looks bad. Figma. Okay. Yep. I can see a case for Figma. I don't know much. What is this? Package software. What do they do? Life cycle software creation, AI powered digital design. Okay. Stuff that's over my head. Cool. All right. So IPOs here at 80. Absolutely typical IPO behavior. Comes out super hyped. Morons buy it the first couple of days. Then the market reprices it and it gets murdered. Like what's going to happen with SpaceX, by the way. Don't shoot the messenger. I love Elon. I love SpaceX. I'm going to buy the crap out of it at 60 or 70 bucks a share, but this is going to happen. Just know that's coming, okay? But again, it's going to go down until we find some demand. And typically, that demand has a shape to it. And it typically looks like this, right? It typically sees a series of shallowing dips showing the supply being sucked out of the stock, showing the buyers coming in and driving it up, and the dips become less and less and less and less and less. It's typically what happens. There's no guarantees as the stock market after all, but this is exactly what it would look like if the stock is being consolidated, right? So it shoots up here, 13% day on Thursday, gives it back, right back to the breakout area, sitting on the 20 and 200-day moving average. I think it's a great time to buy Figma. And I think you could probably risk, let's just call it 10%. Let's buy it. Screw it. I like it. I'll take 1,000 shares of the market. Put a stop loss in. Let's just call it 10%. So 27.40. Well, let me just put a number and I'll just drag it up. Then I'm going to put a take profit number just somewhere random. I like doing this so I can just throw it around. Oh, wow. Talk about a bad fill. Goodness gracious. Okay. All right. 1,000 shares. Now I'm going to put the stop loss. Let's see. What's 10% from entry here? That's pretty close. All right. Let's put a couple of pennies below where we're at here. Let's see. Come on, you stupid thing. Yeah. Just give it a little bit of room. A little breathing room. Okay. I'll put a take profit order at 50. I just pulled that number out of a hat. Really, where do you really think it's going to go? Pop quiz time. If this thing takes off, where's the next place it's going to stall? Well, okay, so somebody said, why buy fake if it just failed a breakout? Very good question. It's a retest. A failed breakout would be coming back below the breakout area and then breaking down below that base. That's why I've got to stop here. You're 100% right, but a failed breakout, it can, try once or I've seen this 100 times. It just runs up, wasn't quite ready, but it's not coming down here like under 25. 40, 40, 40, 38, 36. Yes, my people, exactly. Right in here. Somewhere between about 36 and 40. So I'm going to say, yeah, like 30. Let's just split the difference, put it at 38. Why is my mouse not? There we go. Okay. Put it like 38. And the reason I like setting a take profit earlier, these orders are called OCO. They're order cancels order. So if my stops hit, the sell limit goes away. If the sell limit's hit, the stop order goes away. And you just always kind of keep something working there. But you don't have to do the top side. But that way, if you just get some fluke incident, it gaps up on earnings, and I wasn't watching it, it'll take some profits for me. So, we're risking 10%. We're targeting 38, 39. That's roughly a 4-to-1, which means if this trade works out more than 20% of the time, we're profitable. Right? But yes, these retests are extremely common. I'm trying to find a good example of one. Here's this is a bad example, but the same premise kind of applies here, right? See when Nvidia kind of broke out through this range. See, it had a couple of big days, and then quote unquote failed, but came right here to the breakout area and then shot higher. Everyone's doing what I'm doing, going, oh, I missed it. Oh, another chance, right? So a failure would be like coming down to the base and breaking that structural low where it shouldn't go below. That's what constitutes a failure. Okay. Ooh, a live pre-market gappers. That's a good idea. We should do that. All right, VG, Venture Global. Yeah, looks really good. Now, you see, I mean, we mapped this one out. It gapped and I didn't take it, but we were setting this trade up, and it worked. We're from 10 to 17. And if anybody, so help me God, says, yeah, but it came back. Listen, if you get up 80% in 2 weeks and you let it come all the way back, that responsibility's on you, folks. You know what I'm doing here. And this goes for any trade I take, any video I make. If I buy a stock and it goes up 50, 60, 70, 80% in a couple of weeks, I am selling some, if not all, and I would advise you to do the same. Unless I specifically say or have a thesis like this is something I want to hold for 5 years, 10 years, etc. That'd be an investment, not a trade, but there is a difference. But yeah, VG looks good. Nice breakout. Came back on that retest topic. Again, look at how. See how that initial breakout area then served as support and support and support. Market doesn't forget. It's got a really good memory. Okay. So yeah, I like this. It's it's sold off. It's still deep, and then it started to tighten up and shallow in here. Yeah, I think it looks really good. LEDS semi. Yeah, wouldn't be my pick. Just too whippy. It's it's a micro cap stock. The whole company's only worth $15 million. So yeah, I can't trade this. I mean, look, it only sees $70,000 a day in total trading volume. Like you can only buy a couple hundred shares just without moving the market. Celsius. We'll do Celsius in a while. Oh yeah. See now, look at this. This is what happens when good merchandise goes on sale. Okay, they failed earnings. Profits came in lower. Revenue came in lower. That's a miss, and as a result, the stock dumped 20% a day, right? And how did the market respond to that? They bought the you know what out of it. Okay, that's demand. So if this stock then sets up, now I think it's a bit extended now, and this is, I'll be honest, not a perfect pattern. But if I saw something that said, okay, yeah, now we're kind of absorbing and we get a couple of shallow and they've absorbed it, and then, yeah, absolutely, I want this, right? Because we've seen big demand in this stock, big institutional type demand in the stock. URG. Yeah, I don't really see anything on the chart. I mean, I love the story here. I like the stock. I like the nuclear play. I like the license they have, all of that. It's just still trading pretty crazy. So I do like it long term as a company. Is the stock setting up for something I want to buy at the moment that I think is going to be higher in 2 weeks? I just don't really see anything there. I don't see it either direction. It's just whippy. Circle, yeah, same story here. I mean, I really wish this thing would set up off the lows. It doesn't have to. It does look like it's, stage one basing in here. But man, it just swings hard. And it's totally news driven, like 170% in 40 days, followed by a 60% drop into it. Like it's just wild. But if you like it long term, sure, good time to buy. GSHD. Why do I know this one? Oh, Goosehead. Yeah. Okay. Yeah, looks good. Unsurprisingly, kind of stalled right in here, right? See all this supply? Months of buyers that have been underwater for a year. Not surprising it's stopping there, right? Kind of in this range. So I would expect a new base in here, looking for a new breakout higher, and then obviously running up here to the kind of 90s and above. But yeah, looks very good, very strong. VG's heavily shorted. Oh, interesting. Okay. Yeah, big heavy short interest can, if you get that squeeze, can really make things interesting. You got to time it right, but yeah, HB looks great. I mean, I thought Hewlett Packard was a dinosaur. I don't know much about it, but I mean, this is like that Buffett held for all those years, never had any money on. I mean, he held the thing for like decades. Look at this. From 2018 to 2025, it didn't go anywhere. And then all of a sudden, it's just like, hold my beer. And the thing went nuts, right? But yeah, great action here, right? Now this, again, blow off top. Big gap, 13% up day, followed by another 10% up day, followed by a 30% gap higher. Like, that's blow off top. That's going to come back. But you wanted to come back into that trend, which it is doing. And look where it stalled. The 50-day moving average, this kind of medium dash line here, has continued to support the stock, which it should in a stage 2 uptrend. So it pulled back, got a nice little consolidation. It's got a little dippy, but breaks out. Once again, my girl, there's your retest right to the breakout area. So yeah, this looks really good. Really good. I don't know anything about the stock, about the company, other than they used to make some old 70-pound computers. Alloy. Yeah, another one. I really like the stock. I like the company, but the chart, isn't setting up for a breakout. Now, if you look down here, I mean, this was a bit overcooked. It got ahead of itself, but you see how it kind of came in, like tightened up there. See, that's ideally what I want to see. It's just really whippy. So I don't really have a buy point on it right now. Ambique Micro. I don't know anything about it other than the fact that it's probably going to go lower. Lower highs, lower lows, all the telltale signs. DXYZ. Man, I almost did a video on Destiny Tech right over here when I was at 25 from a fundamental standpoint because they own a big chunk of Anthropic. They also own some SpaceX, but and that's what happened here, by the way. It was just a retail blow off top. Everybody trying to pile in before the SpaceX IPO. And as soon as the IPO happened, well, the stock came back down. But now you're kind of seeing something similar with Anthropic. And you can just use AI. You can kind of backward formulate roughly the market cap of its private holdings based on those quarterly disclosures and get an idea what it's worth. And if the math comes out to 35 a share and it's trading at 25, well, it's a great arbitrage opportunity. USA, yeah, I just looked at USAR. I like this one. I mean, I want to see it firm up here and get above 20. But yeah, the rare earths are showing a lot of strength. I like those. Sterling, oof. Yeah, well, that's rolled over hard, hadn't it? I mean, that's a nasty little downtrend. I don't know what's going on, but boy, that got reversed hard. Wouldn't be something I'm buying. Navitas, nope. Again, I mean, look, $10 to 33, and then all the way back. All the way back. Right? So, yeah, I don't know what's going on, but nobody wants this company right now, I'll tell you that. NEOV. So I'm guessing it's a micro cap stock, and it is. Yeah, I mean, it's just a choppy little thing. I don't really know what's going on with it. I mean, there is kind of some signs here of accumulation. These, the smaller the company, these micro cap stocks don't tend to trade as well as the large and the mega cap stuff. And what I mean by that is, it's a smaller market, right? So the total buying and selling, every share bought and sold on average in a given day is less than $7 million. Okay, you compare that to an Intel that trades $8 billion a day, so less than 1/1000th of the trading volume. So because of that, and then it's just mainly retail investors who are just kind of YOLOing money, a lot of them, you don't get that structural supply demand. No one's building a position steadily over weeks and months, right? So it's harder to spot these consolidate. They just don't exist at the same level because Goldman Sachs can't buy this stock. Warren Buffett can't build a position. It would be 0.0000001% of his portfolio and just not worth his time. So they don't participate in these. And on average, not everyone here, but like on average, the retail investor is less sophisticated than the institutional investor. And so they just don't form up as well. Now, is it trending higher? Yeah. I mean, somebody's buying this thing. Somebody's buying a lot of it. They bought 3.7 million shares today already. That's more than it normally trades in. That's way more than it typically trades in a day. That's double the average trading volume, and it's only been 38 minutes. So, yeah, I mean, let's see if we can. I was hoping we'd see something here on the 1 minute chart. We could trade this thing, but if all y'all bought this right now, it'll go up. It's a thin little guy. Let's see, TRI. Oh, Reuters. Yeah, it looks good. Definite turnaround possibility. Coming up off the lows nicely, consolidating. Just kind of wedging out here a little bit, right? And that's typically what you're going to see. Just think about stocks think about it like a coiled spring, right? As it gets tighter and tighter and tighter and tighter and tighter, it's eventually going to release that energy, one way or the other. What I don't like is when a stock is already doing this and getting wider, it's like, well, I don't really have any edge there, do I? I like buying tight and selling loose, right? I want to buy when it's coming out, and then when it's getting silly and just making, then I'll start taking profits and nailing them down. Saber about to break out? Yeah, sure looks like it. Absolutely does. Yeah. Yes, this looks nice. Nice little. Yep. I agree. I mean, still in stage one. Y'all are familiar with the stock stages, right? You know this stuff kind of plays out the same way over and over. If not, I mean, study this image or screenshot it or something. This is the 4 stages of the stock cycle. This is the process stocks typically go through. It's the basis of everything we're doing here. Because the big shops, the multi-billion-dollar hedge funds and pensions and endowments and mutual funds and ETFs, they're the ones moving prices. It's not you and me. We're just piggybacking. And so if they're all accumulating or if they're all buying or if they're all selling, it's going to trend that way. And if you can identify what stage the stock is in, well, then you've improved your odds tremendously. Like I want stocks either coming out of stage 1 or steadily in stage 2, coming out of a clean base in there. I don't want stage 4 stocks. I want to wait till stage 4 becomes a stage 1 and then breaks out to go higher. So this, to me, is a stage 1 stock, right? So you had a big kind of stage 1 in here, a beautiful, multi-year stage 2, and you might could argue that broke a couple of times in there. Then you get under the 50 and the 200. There's your there's your stage 3. And then there's your nasty stage 4, right? And now we're trying to form another stage 1. Okay, is it finally cheap enough? We can start building a position and build it up. And then once it comes and tightens up and breaks out, that'll start a new stage 2. That's where I want to buy it. But it can sit down here for years, So nothing about this chart excites me. It doesn't scare me either, but this doesn't excite me. All right, guys, tell you what, let's go ahead and end the session here. If you have not already, make sure to get signed up for the Black Ops membership. It is $5 for the entire year. Right now, we're doing these sessions on YouTube. We may have to go back to doing them on Zoom, and if so, only members will get access. But only members get access to the Thursday session with our analysts, so that's included as well, plus the weekly newsletter, plus this industry strength indicator, plus a couple bonus reports and some other things, including access to my team. So tons and tons of value there. Just $5, no strings, no random rate hikes, anything like that. It's just $5, I swear to God. So click that link to get signed up. You can even scan the QR code over there in the corner if that's easier for you. But I hope you guys get signed up, and make sure you subscribe to the channel. That way you'll see the stuff when it goes out. And I'll see you all next week. Thanks, everybody.